the equities market is closing the second trading week of November in the green. Analysts at Cordros say they expect choppy trading patterns to continue. Ope Oluwa, research analyst at Cordros, joins me for more market updates. Thank you so much for your time, Ope Oluwa.
Thank you for having me, David.
Let's start off with your overview of the market performance we've seen, juxtaposing what played out last week and then now this bullish run we are experiencing this week. What is the change in fundamentals you see fueling this loosening of the bear's grip on the market?
Thank you very much. So, I mean, basically, just like you rightly alluded, we've seen the market put out a positive performance, starting from the trading session on Wednesday, and see it, play through to today's trading. So, I mean, basically points to significant local demand that we've seen on Geregu in the market, basically. I think in yesterday's trading and even in today's trading, and which has pushed the price to its highest point since its listing. So specifically, Geregu is currently trading at 130 naira levels, coming off the 100 naira listed at.
And talking about sustainability, how well would likely see the bulls hold on to the market? What do you think would likely help to see this greenish outlook sustained beyond this week's performance?
Yeah, I mean, I think it's pertinent to note that, the overarching theme in the Nigerian macroeconomic landscape is about, the weakness in the economy, right? And this, has sort of found a way to trickle down to the companies, even to the earnings of, the companies that are currently operating in the Nigerian economic landscape in some way, or in some form or the other. So, given that, prospects for the economy in the short term, even to the medium term, still remains in the negative. I mean, we still think that there will still be choppy trading patterns to be expected in the market, and this is as we expect some investors to take advantage of the significant moderation in prices of stock, especially the bellwether names, and we also do not rule out the possibility of continued profit-taking activities that we've continue to see as the market has continued to exhibit so far in the second half of 2022.
Okay, now bringing in focus as well, other subsectors. Let's take a look at consumer goods, insurance, oil and gas, the performance, the banking stocks as well. These have traded favorably. We're looking at some of the stocks being top on the volume. We have Transcorp, we have Access and Nigeria Breweries. Let's look at the fate of these other subsectors in the coming week.
Yes, so I mean, the performance of these sectors will most likely be dictated by, the resilience that the companies in this space will show, and how they're able to play in the favorable operating landscape. I mean, for instance, for the banks now, I mean, so far 9 months, for 9 months 2022 numbers, we've seen most of the listed banks, put out or get put out positive numbers, and this is basically due to increased loan creation, and you can also cite the increase in interest rates, which has helped or fostered the earnings growth for these companies. Then the other side of the balance, you can cite the increased costs pressures that these banks also face, and not just the banks, all across other subsectors, also the consumer goods subsector, the insurance subsector, and the oil and gas subsectors, like you have mentioned. There's this cost pressures that all these all the companies operating in these subsectors have continued to face. So I mean, the performance of the subsector will most likely be determined by how most of these companies are able to navigate the current economic landscape.
And now there are forecasts that the MPC is likely going to also retain the MPR. To what extent do you think this would also favorably affect the banking stocks? Because we saw when we witnessed the increase in the CRR, that also led to some sell-offs.
Yeah, so I mean, the increase in CRR was, perceived as a negative news, and this will most likely hamper the lending capacity of banks, right? So in the case where we have status quo as the the monetary policy committee is allowing the monetary the policy initiatives taken at the previous meeting to permit the economy fully. I think that I think markets will most likely take this. Will most likely take this favor, and we'll continue to see basically status quo on banks. I don't think there will be any material change given on the current the current state of trading the Nigerian banks in the stock exchange right now. Given that the overarching theme points towards a bearish market.
And Christmas is also coming gradually. What sort of play out do you also see for the FMCG sector, especially those who are really going to be buying Christmas wares and investing in all of the activities that would come to bear?
Yeah, it will not be far-fetched to expect the festivities to induce significant demand for products for these FMCG companies. So based off of this, we expect that most of, if not all, the companies operating in this space will put out numbers that surpass the numbers that they put out in the first 3 quarters of the year. So it's also pertinent to cite that also in Q4 we've seen significant FX pressures. So this will most likely hamper bottom line for the companies. But all in all, there's strong probability that strong top line growth would most likely support bottom line growth.
Are there any other intricacies or surprises we should expect in the equities market as we continue to do the comparative analysis between the fixed income and equities market, really? Do you think it still has that resilience and that body language which will win investors' sentiment?
Yeah, it's, it all boils down to the policies or initiatives that we see coming up. So, for instance, we've seen sort of mixed reaction to Dank's share buyback and other policies or initiatives like this from companies listed, especially from the big names, will most likely tilt the market towards either the upside or the downside, depending on the kind of policies that or initiatives that are put out by companies. Then, any significant change in current electioneering activities and possibly, macroeconomic indicators can also, determine whether the market goes further up from where it currently is, or it, drops down below where it currently is.